Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 13th, 2017. Now to get started this week, we're going to begin where we always do with that all-important dollar index. Now when we look at the dollar here, we've got a potential trend line break here, but the key vantage point level is suggesting potentially we have further upside as we've closed at about 100.79, our key vantage point level 100.44. Our predicted short, medium, and long-term differences are above the zero line along with our neural index. We have a crossover on our predicted MACD but below the zero line, so not a confirmation of a trend reversal back to the upside just yet. And our predicted RSI is basically running flat right along our 60 level here, which is not indicative of momentum. A very sideways week last week, and I don't expect this coming week to be much better. We've got Janet Yellen, a little bit of talk from the Fed, may get the dollar moving, but at this particular time, I think we're going to see a lot more sideways trade in the dollar, and it's not going to be overly bullish. Now, when we start moving into our main Forex pairs, the Euro US, we can assess here again, very important, we're looking at these critical levels, 106.86, excuse me, we've closed at 106.39, losing a bit of steam on Friday as gold sold off. Gold having a very high correlation to the euro, but gold is clearly bullish on the year. So again, we're hearing a lot of rumors about the euro currency. It's going to cease to exist. The eurozone's going to break apart. Guys, they said all this about the US dollar just a few short years ago, back in 09. So the euro currency, in my respectful opinion, is not going anywhere here, guys. It is here to stay. This potentially buying on a dip could be a very good buying opportunity here. Right now, we are likely to see a little bit more downside. Looking at those indicators, we do have a bit of momentum building to the downside. But again, this was based around some of the data out of the eurozone, some of the rhetoric in the US politics, all driving factors here, guys. But in short, we're probably going to see a little bit more downside, but I think it's going to be very limited. For next week, we want to watch this 106 level very, very closely. If we break through that 106 level, then we're probably going to make a bigger run, maybe down to 104. But again, we would look to be buyers at that particular area. Now, with US Swiss franc for next week, we can see we do have a very light triple EMA cross here, predicted short, medium, and long-term differences, gaining some momentum here. But again, the position of that predicted MACD below the zero line is not showing a lot of strength to the upside, in my respectful opinion. The RSI, however, is starting to turn bullish with those predicted differences. As long as we hold above that key vantage point level next week of 99.98, that's the line in the sand here. We want to make sure we're closing above this level the first couple of days, Monday and Tuesday next week. Then and only then can we think about building momentum on the long side. Right now, I think it's the Swiss franc is very much being dictated by the equities. We've had a good strong move up in those equities this week, but I'm not convinced at this particular time that that's going to continue. Again, a lot of this is based around Trump's pick, whether he's going to deregulate some of the stock markets. That all is really boosting the financial and the stocks in general, but that may not have a lot of legs. Now, as we come into the pound dollar for next week, potentially again some decent potential buying opportunity here. We've got a strong trend line support coming in again about that 124 area. Last week we had this single push down to the 123.50 area, 123.30, and then a quick rebound. And we can assess here in this area here, VantagePoint did not take the bait on this one as the British pound sold off and everybody said, you know, this pair is going to 119, 120 last week. It immediately shot right back up. That formed a new demand area here, a new trend line, but it is still predominantly bearish. I don't dispute that. But how much downside is left to be seen? We've crossed over on the predicted MACD, but our predicted RSI at 49.2 is saying basically we're going sideways. And again, we have this very powerful newly formed trend line support coming in at or about the 124 area. So we want to watch that area very, very closely going into next week. Now, as we come into the dollar-yen pair, everybody, including myself, watching this critical basically about the 111.80 area. We repeatedly tried to break below here. We failed. We still don't have a triple EMA cross from VantagePoint. 113.37. We couldn't close above that, which again tells me that the equity market, the rally in the equity markets could be very limited. Now, this upper trend line, it basically is intersecting with that VantagePoint 18-day predicted moving average. We do have our medium-term crossing over our long-term predicted difference to the upside, along with that very important neural index. But again, we're basically, you can see the momentum indicators are essentially sideways to flat. So there isn't a lot of momentum in the market last week, and I'm not convinced there's going to be a lot coming momentum in the market this coming week either, as the docket is pretty clean. There isn't a lot of economic first-tier data. We've got a little bit next week, CPI, but the Yellen's statement is going to be very important. But for now, dollar yen will only move higher as long as the equity markets keep moving up, guys, as I try and reaffirm to everybody every single week that if you want to go long on the dollar yen, you need the Nikkei and more importantly, the S&P 500. They need to be moving higher. Now, as we look at US Canada going into this week, very interesting setup on here. A new trend line is formed here, but again, we've got an inside bar that's actually formed right beside this trend line. Basically, that sent the US CAD pair lower. Shorts to begin the week, I think, are reasonable, providing oil remains firm. Now, we can see that this trend line is coming in at or about just under the 132 area. As long as we hold inside of this trend line, then we're probably going to move to that lower part of that range down around 129.50. We can see our shorter term indicators from VantagePoint are essentially confirming that as we fail at the 60 level here on the predicted RSI. But again, in order for there to be momentum here to the downside, guys, we need this predicted RSI breaking below that all-important 40 line. We're at 43.7. A break of the 40 level on the predicted RSI, you can see this little range that I've got set up in here. When that breaks, we should see a substantial move, much like this one here about 3 weeks ago on this triple EMA cross. We would be looking for that to repeat. And again, when we look at price action, indisputably, we've got much lower highs, also signaling that we are probably going lower. Now, as we come into the final two commodity currencies, Aussie US, New Zealand US, we can see that we have significant trend line resistance coming in at the 77 level. Everybody is watching this level very closely. However, in my respectful opinion, a lot of the analysts and a lot of the traders maybe have it a little bit wrong here, where what we've been watching here on Trader Planet, what I've been discussing also with my own direct clients, is again, the way the market is hugging the VantagePoint 8-day predicted moving average. You can see that we've tested it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times we have tested the VantagePoint 8-day predicted moving average. In my respectful opinion, once or twice is a coincidence. 12 times is an absolute trend. The buyers, the bulls, they're in control on dips here, guys. So unless we break through this key vantage point level at 75.80, then we are likely going higher. But we must break through that all-important trend line resistance. If we can't get through that level, then we are absolutely going lower on a dollar rally. That would mean we would need gold selling off. Aussie US right now, guys, it is not that correlated to the S&P despite what you hear. It is 95% correlated to gold contracts. Gold going up, Aussie US is going up. Same as New Zealand US. Now, New Zealand took some real heat last week on the Bank of New Zealand coming out very ultra dovish here. Massive failure at this 74 area. But again, in most cases when a central bank tries to interfere with the markets, in most cases that doesn't carry a lot of weight. So what I would be looking at for next week is to see if we can hold below that critical VantagePoint 18-day predicted moving average coming in at 72.27. We've closed very close to it actually at 71.98. So if we can retake 72.27, then the New Zealand US will start to move higher, but it's going to take gold moving higher. It's going to take a weaker Fed or more dovish Janet Yellen on her testimony. I believe it's on Tuesday or Wednesday of next week. Don't hold me to that. I'd have to check the economic calendar again, but that is definitely the event risk that we want to be careful of next week.